Welcome to the PlanStrongerTV Market Update for Wednesday, April 29th. Let's take a look at our numbers. You first will see on the screen there, of course, our 2025 total return for the indices that we track and comment on this update. So again, those very strong returns for the total 2025 year. 2026 year to date, a little bit of a different story. And as you will have Kyle go ahead and just scroll those numbers all down the page. And if you first blush, you look at that, you think, well, wasn't there a market pullback or maybe even almost a correction? Did we get to almost 10% with some of the indices? And the answer is yes. And so where did it go? Well, time took it away. You know, the market goes up, the market goes down, but over longer periods of time, we see those shorter term drops smooth out and disappear when we look at the total return for the period. So, and again, that's raw, not annualized data. So if you look at the Dow, you look at the total stock market index, the S&P, the NASDAQ, decent returns, again, for only a partial year. And then look at small cap and foreign stocks. Those are not annualized numbers. And you can see that the small cap total return year to date is almost what it was for the entire year for 2025. Foreign stocks, again, strong return year to date, and bonds kind of quiet. So to comment on that and then get into some specific things we wanted to share with you is Robert Marr. Robert? So first reaction or commentary for the viewers for the market activity that we're talking about.
Well, it's hard for me to answer that question, Dave, because I'm a little bit ashamed. Yesterday, we had a red day. All those indices, or most of them, were down in the red, negative. And that wasn't the only day since last week. So I was nervous doing the numbers, like how many of these numbers went into the red? And to my shock, about half of them went up, NASDAQ in particular, rebounding. A couple of them, like the very strong small caps, non-US, actually came down a little bit. But we're still all in the green. So, even people who do this 24/7, we get caught up in the, oh my gosh, wow, this pullback or it's red or that. And, we have to take a step back sometimes and look at the last week, last month. And so that's number one, much better than I had anticipated pulling the numbers this morning. I'll leave my commentary at that. So.
All right, well, and I'll tee up the next question for Robert because he knows it's coming. So let me go ahead and throw it to him. So there is a lot going on, of course, in the news all the time. And one of the things that we know drives the economy in a significant way, and in many aspects are from different directions, is housing. So Robert, you've got some new data that's come out. What do you say about that, and what does it look like we should take from the data?
Yeah, so about 2 months ago, I think beginning of March or so, we talked about homes that are built and are selling on the market. But today, specifically, I want to talk about housing starts. So the construction companies beginning to build new homes. And that, so, in January to February, we saw a little downturn in terms of housing starts, but completely from, and this data just came out this morning, completely different story for March, 1.502 million versus an expected 1.4. So that's over, that's about 102,000 more than expected. So housing starts is saying these are companies, the housing industry said, you know what, we're building this many more housing units than expected. So, their outlook is pretty good. And even though we're focusing on housing starts, there's always building permits, which is kind of the step before a contractor begins to build a home. And that's kind of a little juxtaposition to the positive data because, those were really positive the prior month, but kind of a little below expectations this month. So again, they kind of even out, but just the data, that data point with housing starts coming in much stronger than expected, portends some good things for the housing market going forward.
Well, yeah, for home builders to say, okay, we're gonna push and we're gonna increase our capabilities to build these homes, that ripples through the economy in terms of supply chain. It also is certainly an indication of confidence, not only by the home builder, but they're not doing it in a vacuum. There are people that want to buy those homes or they wouldn't be building them because it requires capital. It requires planning, allocation of resources, employee time, all of that. So it does indicate, or as Robert said, portend of increased economic activity or it wouldn't be going on.
Correct, exactly.
And so there's a tie-in, of course, with expectations on interest rates as well. And we talked on an update or two ago about interest rates and where that may go. And so any tweaking or new perspective you have, Robert, based on where we are today about interest rates?
Yeah, it's maybe kind of a soap opera scenario here, but instead of a tweak, really a major development, quite the antithesis of a small tweak. But the Department of Justice kind of reined in their investigation with the new Federal Reserve building and the cost overruns over the last several years. So they've kind of reined that in, and then one or two senators who kind of were withholding their vote for the Mr. Warsh, who President Trump has appointed to be the next federal chairman, that vote can now seemingly go through, which is a big deal. So assuming that person is confirmed, Mr. Powell has no excuse to remain on board as chair. We can get a new person in, somebody who probably, take this with a grain of salt, is expected to perhaps, if a lower rate is expected, will probably lower rates sooner rather than later. And of course, lower rates mean lower borrowing costs, which means lower interest rates for home buyers. So that's kind of a major development in terms of the Federal Reserve. They are meeting today. The interest rate decision will be made today, April 29th. 100% probability interest rates are not moving. They're saying the same.
Right.
But for the next meeting, it has a lot of ramifications moving forward to the rest of the year.
And the housing market and the overall stock market, the bond market, all of that is always about what the rates are going to be in the future and the magnitude of the change. And if the new Federal Reserve chairman is more dovish and more inclined to either keep rates where they are or have a mood or attitude, an inclination, whatever way they put it, toward a lower rate environment, then that will be good for the housing. It'll be good for the market and for small businesses. We'll see probably some continued performance by small caps. So that's kind of a bow around that one. I'd be remiss, because I know Robert mentioned this to me before we started doing the update for you. A quick word on some developments in the Middle East as it relates to oil production.
Yeah, so the UAE surprisingly has removed itself from OPEC, the Organization of Petroleum Exporting Countries. That is a big deal. UAE is the third largest producer of oil and natural gas. Right now, their capacity to pump oil is approximately 4.85 million barrels per day, but under their OPEC quota, they're only pumping 3.5 million. So them removing themselves from OPEC and saying, you know what, we're going to pump as much as we want because we want to steal market share, we want to make more money. Heck with the OPEC deal that we've been in for the since 1967 or something around that time. So that's a big deal. And I would be remiss, I'm just going to throw this out there. David did say there's a lot to talk about, but just consumer sentiment came out yesterday. People were expecting it to be, this low. It was actually a lot higher. They were expecting a reading of around 89. We got 92.8, so almost 4 points higher than expected. So big deal in terms of consumer sentiment. A lot of things rebounding from their lows. But with oil production, increased production from one major producer, supply goes up, demand goes down, prices go down. Major development.
And the question the viewers are going to want to know then, Robert, is how much of what you just said, baked in the cake already relative to how the market has been responding over the last, week or so with that?
Well, the market really didn't respond to that news because everybody's focused on the Strait of Hormuz closure, as well they should be, and that's still, a development in process. But for the short and midterm, especially for the mid and longer term, that is a major development. So no, people aren't going to see gas prices plummet $1 over the next week. No. But moving forward, it is a major development in terms of other countries perhaps following UAE, United Arab Emirates, in removing themselves from OPEC.
Okay. Well, We'll continue to monitor these things. There's a lot more to talk about. That was kind of a quick overview, but we'll dig a little deeper as more data comes out and we can, kind of complete the story on these areas and how this will affect the market, the economy, and of course, how you do what you do with your investments and things you can be thinking about for how to best position yourself or maybe make adjustments in light of what's going on and your personal circumstances. We'll be back to help you plan stronger.